Welcome back. The Magnificent Seven stocks continue to do really well in 2023. Their gains in 2023 are just incredible, frankly. And I wanted to take a look at the Magnificent Seven and show you where they're at year to date, and also show the last 5 days. We've seen the market really rise over the last 5 days. I wanted to show you what's happening with the Magnificent Seven. I also wanted to compare these seven stocks against the rest of the S&P 500, meaning the other 493 stocks. And I also wanted to compare these seven stocks against the NASDAQ. And I have a few takeaways that I think you'll find interesting. So let's get into the analysis of these seven companies. So I'm going to start with the number one appreciating company, which is Nvidia. Nvidia is up 227% year to date, which is incredible. What's also interesting is that they're up 6.3% in the last month. So they are just incredible this year in creating value for shareholders. If you own Nvidia, congratulations. I am not fortunate to own Nvidia, but I'd like to congratulate whoever was smart enough to buy that stock. The stock in second place is Meta. Meta is up a great 163% year to date. So great job, Meta. And what is really nice about Meta is if you look at their chart, it's just the smoothest chart, upward momentum, and the stock just keeps going up. In the last month, it's up 7.6%. This is the biggest stock in my portfolio. And I really think Meta is a great company, great strategy, dominant in the markets that they operate in. So it's great to see that stock really flourish and help me beat the S&P with my return. Third place goes to Tesla. This incredible auto company that is slash tech company is up 155%. Just a great rise in appreciation over the last month. It hasn't done great compared to the others. It's up about 1.2%, but overall just a big winner for 2023. Fourth place goes to Alphabet, which is Google, and they are up 58%. For the year. I own Alphabet. It's the third biggest position in my portfolio, so it's great to see them. I believe that Alphabet has a sound strategy. They are in the right businesses. Their search business is just a huge cash cow. Their cloud business is really growing and beginning to be profitable. YouTube is awesome. It just took over in the young viewer category. It took over as the most viewed online streaming service over from Netflix. So YouTube is just growing really well. So I just think very highly of Alphabet, and they continue to go up. In the last month, they're up about 4%. And I still think there's a discount in Alphabet. And I continue to buy shares on really down days, but it's just great to see this stock rise. Fifth place goes to Amazon. And as we know, Amazon is a great e-commerce company that also has other businesses that are doing great, like their cloud business as well as their video business. They're just doing a lot of things well, and they're up 54% year to date. In the last 5 days, they're up 4%. So they're just rallying. I was an owner of Amazon, but felt like it had exceeded its value, and I felt that in 2023, I mean, this is great to see these stocks go up as much as they have, but I wanted to take some money off the table. I made a big gain on Amazon, but sold my complete position in Amazon just to take some money off the table. In sixth place in appreciation is Apple. And Apple is up 44%, which is quite incredible if you consider that they are now a $2.81 trillion company, just so big. They're up 3.5% in the last 5 days. It's a favorite to many, including Warren Buffett. And this company here, it's understandable that they have a great appreciation, but not keeping up with Nvidia or maybe Meta, just because they're so big. The law of big numbers is in effect with Apple, as well as Microsoft, which I'll get to in a moment. But I think that, Apple is going to have a hard time maintaining this valuation, principally because they're not growing their business. If you look at the last 2 quarters, there's no growth. I don't think there's going to be much growth really for the next couple of years until they introduce a new business. Is it going to be streaming? Maybe. Is it going to be an acquisition? maybe, but I think they need to set their strategy so that they continue to grow and keep up with Alphabet, Amazon, who are very good at developing new businesses that could drive their future growth. And in seventh place, but still coming in with a great appreciation rate, is Microsoft. They have appreciated year to date at 39%, and over the last month are up 4%. Microsoft, again, is a huge market cap company at $2.47 trillion. And Microsoft is doing a really nice job of diversifying their business. They're completing the Activision acquisition, which is going to help them grow. I think they're operating their businesses really well. So it's a really sound company that is obviously the second most valuable company on the market. When I add up the valuation of all these companies, these seven, it equates to $11.25 trillion of market cap, which really is 31% of the S&P overall. These seven stocks represent 31% of the S&P index, and the other 493 stocks represent 69% of the value of the S&P index. Now, what I find incredible is that if you look at the S&P and how much it's appreciated, the S&P has gone up about 14% if you look at the average as a whole, but the Magnificent Seven represent 86% of that gain for the S&P, which is almost the whole gain for the S&P. That's really interesting. The other 493 companies make up the 14% appreciation. Very lopsided, wouldn't you say, that most of the appreciation has happened in these Magnificent Seven stocks. When we look at the NASDAQ, it's a little more balanced. The Magnificent Seven actually make up 45% of the appreciation overall for the NASDAQ, and the other companies that are on the NASDAQ make up 55%. So that's a little more balanced, but the takeaway that I have there is that small and medium cap companies have lagged, and that's not a problem. That's an opportunity. Maybe some of these software companies, technology companies, or companies outside the sectors that these Magnificent Seven stocks operate in have a lot of value that hasn't been recognized yet by the market. And that's an opportunity to investigate, analyze, and buy into companies that have lagged. I think the investment in these Magnificent Seven stocks now is becoming, in my opinion, riskier. For example, Apple. Do you buy Apple now? Well, is it going to do anything? How can it go up in value when it's already a $2.8 trillion value company? If it goes up 10%, it's just a massive move in market cap. But a company that maybe has a market cap of 10 billion, if it moves up 20% in value, it's not a big move at all. So I'm looking at that as an opportunity. That's why I wanted to do this analysis, is kind of get a sense of where the market's at and where the opportunities should be overall in the market. So thanks for watching the video. I appreciate it. I hope you found it interesting. Do me a favor and like my video and subscribe to my channel. I'd appreciate that. And leave comments. Tell me where you think the Magnificent Seven stocks are going to go over the next 12 months. So I'd love to hear some comments on that. And, you know, if you think I'm wrong about anything, or maybe some of my assumptions you disagree with, I'd love to hear that too. I love learning, and I love really rethinking some of the assumptions that I'm making, and maybe seeing what points you make. So with that, let me wish you the best of success in investing in 2023.